where I think this bull market will end up peaking out, I think it's going to be around $6,000 an ounce. And the basis for that is to look back at the huge bull market we had in 1979, 1980, and look at the value of gold then as a percent of disposable personal income per capita. And it was about 9.9%. So let's just say 10%. Take 10%,
Okay.
take 10% of current disposable personal income per capita, and you get it's a little over 6,000.
Market strategist Steve Hanke anticipates that the current gold rally could eventually reach around $6,000 per ounce. His outlook is based on historical comparison with the 1979 and 1980 gold boom, when the metal's value equaled nearly 10% of US disposable personal income per capita. With today's income levels, that ratio points to a similar price target near $6,000. Meanwhile, the likelihood of a 25 basis point rate cut next month has slipped to 63%, down from nearly 90% prior to the recent FOMC decision, further influencing investor sentiment. Hanke emphasizes that this forecast stems from economic fundamentals rather than speculation. Persistent inflation, growing debt burdens, and eroding faith in fiat currencies are driving investors back to tangible assets like gold. He concludes that such a rise would represent a structural revaluation, not a bubble, marking gold's enduring role in global wealth preservation. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Where I think this bull market will end up peaking out, I think it's going to be around $6,000 an ounce. And the basis for that is to look back at the huge bull market we had in 1979, 1980, and look at the value of gold then as a percent of disposable personal income per capita. And it was about 9.9%. So let's just say 10%. Take 10%,
Okay.
take 10% of current disposable personal income per capita, and you get it's a little over 6,000, but just round it off at 6,000. Okay, so that's point one. Now, point two, you say the consolidation. Well, it is consolidating, and it's consolidating though around 4,000. If you look at the call up, and this is the key, the call and put, we've got those coming due in November 24th. We've got 8,514 options. This is as of yesterday. I haven't updated it today. Call options. That 3.4 billion is being bet that the market will be above 4,000 on November 24. And the put options, we've got 4,812. That makes $1.9 billion being bet on possibility of being below 4,000. So the punters are betting at a ratio of, about 2-to-1 roughly, that will be above 4,000 late this month on the 24th when those options expire, if that makes any sense. I think we're definitely consolidating. It's consolidating around 4,000 with those with skin in the game betting that it's going to move above 4,000 by
Mm-hmm.
the end of the month. So what's interesting about the market is there are these correlations, of course, never really, as they say, correlation doesn't imply causation. But in 1979, when did the market take off? It took off after we froze the Iranian assets, with the Iranian Revolution.
Of course.
Now, when did the market take off now? When we froze a Russian asset. The big winner in Argentine dollarization would be Argentina. There'd be such a huge positive confidence shock and boom in Argentina that it would knock your socks off. And that's why you'd get this demonstration effect. If they did it, there would be a huge boom. There'd be, for once, stability. You'd eliminate banking. You'd eliminate all the defaults on the debt that they have, because the key to understanding this, the biggest debt deadbeat in the world is Argentina. they've defaulted multiple times on their international debt as well as their domestic debt. Now, why does that happen? I've done an analysis with Professor Frank Warnock at the University of Virginia. Happens to be one of my former students, by the way, but it's a very distinguished professor at the University of Virginia. And we analyzed what has happened to the debt that's been accumulated in Argentina since 1995. So they've accumulated $177 billion in debt. And we have calculated 76% of that debt has left via capital flight. It doesn't stay in Argentina. So they accumulate debt, but only about 25% of it stays in Argentina. Now let me walk you through this little exercise. Let's assume that you borrow $100 and the interest rate on that is 8%, which is roughly the interest rate that's being paid by Argentina on all of its debt, 8%. So that means that you have to invest the 100 that you've borrowed and into an investment that at least earns 8% a year so that you can service the debt. So you have to invest and generate $8 in this exercise. But if 25% of that money is all that remains that you have available to invest to generate 8, that 25%, the 25 has to earn a 32% rate of return. But this is just not in the cards. And this is why they're in a doom loop. They default all the time because no one wants to be in the peso. So you have capital flight, 75, 76% of the capital coming in goes out. And that's why they default all the time. So it's a pretty, once you really think the thing through carefully, which took me quite a while to do, but I finally did it. you see that this money, the bailout money that's going in from the United States, it's not going to solve the problem. The only thing that will solve the problem is to get rid of the peso and stop the capital flight so that all the money coming into Argentina, which, by the way, there'd be a flood of money coming into Argentina if the dollar was a currency, but all the money coming in would stay. And there's been such a deficiency of investment for decades in Argentina that the potential for good projects with very high rates of return, very bankable projects, would be tremendous.
Steve Hanke highlights that Argentina's chronic instability stems from persistent capital flight and poor monetary governance. The nation has amassed around $177 billion in debt, yet 76% has left the country, leaving too little for productive investment. This cycle of borrowing without return traps Argentina in perpetual default as confidence in the peso collapses. Hanke insists that dollarization, replacing the peso with the US dollar, would restore stability, end capital flight, and attract long-term investment. In global markets, Steve Hanke predicts gold could peak near $6,000 per ounce, reflecting trends last seen in the 1979 and 1980 bull run. He notes strong consolidation near $4,000, supported by call option dominance, signaling bullish sentiment. Hanke links this momentum to geopolitical shocks, emphasizing confidence-driven surges in asset values.
There is a problem, and many people, it isn't a problem, but the problem is what they call feasibility. They say, well, the Banco Central is insolvent and they don't have enough money to dollarize. This is not correct. The kind of official line is that they'd need $30 or $40 billion to dollarize.
Okay.
That's not true. We dollarized in Ecuador when the central bank was insolvent. Now, how did we do that? All you need to dollarize, you don't need net foreign reserves that are positive. All you need is gross foreign reserves that are positive, and positive enough to exchange at whatever exchange rate is determined the dollars that you have in foreign reserves for the pesos outstanding, the M sub zero, the monetary base. You have to be able to convert the monetary base that's in pesos into dollars. So all you have to have is enough gross reserves.
Got it.
do that, and they do have it. I mean, I've run the numbers, and they do it. So this infeasibility thing is just a nonsense. The Minister of Finance keeps repeating that it's not feasible, and even Malay has hinted that it's not feasible. But he's getting bum advice, bum information by people who've never dollarized. I mean, I know what I'm talking about from an academic point of view, but I've actually done it. Oh yes, because the stable coins that are issued and regulated, and under the U.S. purview, the Genius Act is a U.S. piece of legislation. In any stable coin that comes out and is being regulated and under the Genius Act, they require dollar denominated assets, and one thing that, for example, Scott Bessent, the U.S. Secretary of Treasury, has indicated, oh, this is a great deal because it increases the demand for U.S. treasuries. That's been the argument in favor of stable coins and so forth. Their pitch is that this will increase the demand for U.S. dollar denominated assets, namely the things that are specified in the Genius Act are U.S. treasuries. What I'm talking about is official dollarization, either to get rid of their local currency and replace it with a dollar. That's one thing. The other thing would be a dollar-based currency board that would be also governmental, because the currency board would replace the central bank in whatever the country happened to be, and that country would issue its local money via the currency board. That local money would be at a fixed exchange rate with what? The U.S. dollar, which would be the anchor currency. And the requirement would be that for every domestic unit of currency that was issued, you'd have 100% U.S. dollar backing of that with the currency board. So that the two avenues that I'm exploring, it isn't the Genius Act and stable coins, which are private, but rather public. The Genius Act, in principle, again, this is in principle, is that a token issued as a stable coin would be a clone of the U.S. dollar. That's what these tokens are. The people don't realize. They think it's some magic or something. No, I mean, if you're following the letter of the Genius Act, it's being enforced and everything, then the tokens being issued under the stable coin, whatever it happens, whatever you want to call it, they're nothing more than clones of the U.S. dollar.
Dollarization could be the key to rescuing Argentina's troubled economy from its endless cycle of debt and devaluation. The process is not as financially impossible as many claim. All that's required are sufficient gross foreign reserves to exchange pesos for dollars. The myth of infeasibility persists, mainly because policymakers rely on flawed advice rather than practical experience. Moreover, official dollarization could coexist with a currency board system, ensuring a stable, fully backed exchange rate. Stablecoins and the Genius Act illustrate the growing global demand for dollar-backed assets. Could this be a signal that Argentina's next logical step is to align with the dollar itself? With such a move, investment confidence could surge, reversing decades of instability and economic flight. If you found this information valuable, make sure to hit like and drop a comment below with your thoughts. Don't forget to subscribe and turn on notifications so you never miss the latest updates. Thanks for watching.